Hi there, traders. This is Brad Goodwood with the Daily Market Insight for Thursday, the 29th of June. All right, as I've been saying for some time, there's been a bit of discombobulation with a lot of the major currencies here. And we do have things like the major instruments just out of sync, right? The dollar's not consistent across the board, and that makes things very tricky. Now, for me, the big surprise packet this week is the ECB conference, right? The central bank panel. It's about central bank policy. And this is a bit more than just having a discussion, right? These guys have been going at it for a few days now, and it didn't stop yesterday. And we started to see a bit more transparency. Now, they're sort of quoted in here as Powell saying, okay, there's potentially 2 more rate hikes, and there could even be more after that. They sort of got the dollar sort of moving topside, bit of a flush out of sterling longs, like this sterling market with interest rate hikes, high inflation, everything else going on. The market's very long and got cleaned up. Now, you come down the bottom here, Christine Lagarde is talking about how they've got long-term inflation, but there was another sort of component that where the central bank heads, right, we're sort of saying, here it is down here, sorry. The Bank of England Governor Andrew Bailey said it remained to be seen if financial markets are correct about the number of interest rate increases they are expecting from the British Central Bank, and basically talking about does the market actually do they know what we're doing, right? And it was like they're not supposed to be there sort of questioning everything they're going. They should be there sort of working about their policy. Instead, they've been talking about the market, possibility of further rate hikes. It's like I'm going to outdo you with 2 rate hikes, and we're going to raise rates more often than you, and this, that, and the other, right? It's actually a little bit chaotic, and it's sort of created a bit of unease in the market. Now, if you look at let's come over here to the charts, right? Looking at the global markets, the equity markets, particularly in the US, don't really know if they're coming or going, right? And this is because, one day we've got the ECB saying they're going to raise rates for a longer period of time or a lot higher inflation. Then you've got the Fed sort of not saying too much, then coming back in. So it's sort of whipping all over the place. The dollar index, if anything, has tweaked to the top side, a little bit of a dollar strength, and that probably goes with Jerome Powell's text about, that the more rate hikes are coming out of the US. We had a little bit of blip down in oil back in the middle of the range. Gold is still tracking to the downside. Say a blowout down through 1900 will be enough to get it really rolling. If I just come over to the currencies, right, it's once again, it looks like it's an easy trade here, like this trade down here in sterling, just a massive sort of flush out. And you've got that sort of euro sort of drifting down. Aussie CPI numbers very weak yesterday, sort of stalled around sort of 66.30, but you know what, starting to track lower, and the Kiwi going with the Aussie. Dollar Swiss, well, it is sort of working with the euro, but no significant moves. Now, the Japanese have started talking about, how painful the yen weakness is. And like a lot of the articles you'll read is, well, the fact is you become a lot more competitive globally. So that's a good thing for Japan. So really, instead of the finance ministers, you want to be looking at or listening to the Bank of Japan. Dollar CAD has had a massive turnaround, heading topside up to 132.50. Like any chance of rate hikes out of Canada have pretty much sort of dissipated, and a big unwind of that CAD trade, right? And that's where we are. Like there's still things in play here. Looking at the yen crosses, don't forget to keep an eye on these things. I still think we're a fair way away from the BOJ intervening. And we are starting to see a little bit of discombobulation. The commodity currencies like Aussie yen, Kiwi yen, and there's a little bit of CAD yen. I got caught up in that little blip to the downside there yesterday. Now, when it comes to potential big moves down in the yen crosses, you're probably more looking in the Asian session. So if you are setting up orders, make sure you cancel them at the end, because once that Asian session's over, it does get a little bit loose, right? If anything, out of the yen crosses, the best structure here would be euro yen. It's got hasn't broken down, but we aren't seeing a continuous breakdown. The markets this last week of the month are just teetering through levels. And it's very frustrating, right? Because you start to see things happening, you get positions on, and then it sort of stalls. And then other times you see like a clean breakdown here of sterling where it drops 100 points and you're scratching your head. Whereas some of the other instruments in the meantime drop about 20 points. So tricky market there for sure. If you come back just to the economic numbers, right, we've got now there's some Japanese numbers here that may come into play. I think it's a little bit early, but you've got some numbers to work with. If anything, the New Zealand business activity numbers, ANZ business outlook numbers, you're looking for a left field number there, like a severe variation should get it moving. And Australian retail sales numbers there. Maybe that goes along with the Aussie CPI numbers. But all in all, it's not exactly easy pickings. The US equity markets were up. We're not seeing that consistency across the currencies or commodities. So I'm sort of going to be taking it a little bit easier as we go through the rest of the week, right? Just doesn't make a lot of sense to me. All right, and that's if you just have a look at the global markets. Well, you've got US treasuries or global bonds. Actually, the yields still seem to be cruising topside. Currencies discombobulating. Equity markets are all sort of moving together, but basically there's no sort of rhyme or reason at the moment. We just need these central bankers to stop talking and just focus on the numbers instead of the crazy jargon they're going on with. All right, guys, that's it from me. Have a good one. Cheerio.